Hello all, it's the week of the 2nd of May 2022 and I'm Mark Troyer in the LastPass Solutions consulting team. This week I'd like to speak about how to cut costs on cyber insurance premiums. The topic was discussed on the LastPass.com blog last week, written by Amber Steele. I encourage you to take a look at her thoughts using the link in the notes associated with this LinkedIn or YouTube episode. The market for cyber insurance is a relatively small but fast-growing market with growth rates from 30 to 50% per annum depending upon who you ask. The latest estimates seem to be that it is a $5 billion a year market, but is likely to approach $15 to $20 billion as we finish 2025. Unlike other parts of the insurance market, there is a lack of so-called actuary data that allows data scientists to accurately predict when a given cyber incident claim might occur. Let's compare this to the general business insurance market. In this market, data scientists, or again, actuaries as they are called, can very accurately define how many fires are likely to happen in a given small business and the average claim size per 1,000 underwritten policies. They know, for example, that 12.3 incidences are likely to occur over a given year per 1,000 policies. They would also know, for example, that if a small business has fire extinguishers installed, the claim cost would be 87.8% less. We're starting to see the cyber insurance market mature as more data becomes available. With this data, we will see actuaries and underwriters offer more standardized cyber policy requirements. This starts with the underwriting of customized policies for very large enterprises who may need perhaps as much as $100 million in insurance coverage. At the same time, small to medium-sized businesses are now being offered standardized cyber insurance add-ons from their insurance brokers as part of their standard business insurance offerings. We even see some forms of cyber insurance being offered at the individual or professional level as part of a standard personal home contents policies. Why do I bring all of this up? Well, the functional equivalents of the fire extinguisher in the cyber security world are becoming more clear. We expect a lot of changes in this area as the market matures and de-risking factors become more statistically understood. Underwriters will continue to clarify the IT policies with which organizations need to comply to first get coverage, then reduce policy premiums, and finally successfully make eventual claims. Amber writes in her blog that some of the most effective de-risking policies against social breaches of personal information, as well as ultimately ransomware attacks, are in the area of identity and access management policies. She names out a few of these, one being the use of multifactorial authentication infrastructure as one of the key policy conditions for cyber insurance. In my mind, these are the in-the-sunlight conditions. They de-risk a policy through the identity and single sign-on infrastructure environments for key IT applications. But what about the shadow IT applications that are widely used by employees but not in the sun? In other words, they are not in the corporate application suite. In reality, this is where the problem starts, in the shadows. This is why so many organizations are focusing on IT security awareness programs, often starting with password hygiene and phishing at both a business and personal level for all employees. It is an area where comprehensive password management can further reduce the probability of cyber incidences. Increasingly, enterprise password management is being named out in cybersecurity insurance terms and conditions. We in the LastPass Solutions consulting team are starting to spend a lot more time working with organizations to help them comply with cybersecurity policy requirements and reduce, of course, the cost of annual premiums. Here are my questions for you this week. What new cybersecurity insurance terms and conditions are you seeing in the market related to identity management? What areas of compliance are you seeing that leads to lower annual premiums? And finally, where do you see all of this going over the next 5 years? We look forward to reading your comments. This is Mark Troyer with LastPass signing off.